You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good morning, Jim.
Interesting markets. They seem to be a little flat right now, and you're saying this is a great time to examine what has gone on and what your plans might be for the future and take advantage of it. We're calling this show Claim Your Gold at the Winner's Table.
I really believe that in a few years' time that those people who participate in this market decline and establish their positions and follow through with the plan they set up will be at a golden winner's table with prices on the mining stocks many times higher than they are. Nobody said it was going to be easy, and nobody said exactly when it's going to happen, but I think we're in the later process of this 2-year decline in terms of price and time, that people that still have money to deploy, or if they want to change their positions a bit, have an opportunity to fundamentally change their wealth profile over the next few years.
Some interesting news from the Toronto Stock Exchange. Gold stocks are actually leading their sales yesterday.
Well, that's pretty interesting, and we've seen the case of a number of companies where the insider buying, those are the people who know their company best, has been very, very strong. So there are certainly some straws in the wind out there, but we can't wait for everything to be looking positive because by then the market will turn. So we have to participate when things are negative and when the prices, everything you read is negative, and that's the opportunity where you have to get stocks at a better price than when everybody is on board with the up move. But the key is, I think, is that your actions have to support your beliefs. And one of the ways to be successful in the markets is to dial down the emotions as much as we can. You can't be operating from fear and greed. You have to operate, as I believe, on the triumph of principles. In other words, they have to be valid principles, and they have to be ones that fit you emotionally and financially.
Are there examples of people you think are doing a good job right now?
There certainly are, and there are people that have done a good job in the past when we've been in situations like this, whether it was 2008 and 9, or whether it was going clear back to the actual beginnings of the bull market, or even a few years before, such as 1998, 1999, for example, when Rick Rule established a couple of accounts, and he was a couple of years early, but he ended up with himself and the people that participated when the market really got going about 3 or 4 years later. They ended up making 20 times their money. And that intrigues me, and I think the possibility of making between 5 and 20 times my money is really a stimulant for me to do the best I can to control my emotions, to control my position, and to be patient.
Are there, we said follow examples of certain people. Are there particular comments that you pay a lot of attention to?
There definitely are. These are people that I follow on a weekly basis or whenever they have something to say, or when I happen to be at a conference where they're speaking. I follow people like the number of people in the Casey Research Group like Louis James. I follow Doug Casey, Jeff Clark, and I also listen to what Rick Rule has to say, and Eric Sprott of Sprott Asset Management. Also David Morgan, of course. Jim Sinclair, I've followed him for many years. Sir John Templeton, the late Sir John Templeton, was always someone who I kind of viewed as a long-distance mentor for me. I never met him, but I just was amazed at the way he participated in the market ups and downs. And, of course, the famous Jesse Livermore, who wrote one of the most famous books in all of investing history, quite a character back in the 1920s.
So these are big names, of course, that most people who invest in precious metals will know about. But what about your average person getting in a chat room and finding out what they're doing with their money?
You know, that's an interesting point that you brought out, Jim. I have a real bias on this. Might even call it a prejudice, but I've noticed that these chat rooms, they seem to be almost entirely negative. There's so much ankle biting going on, and a lot of misinformation, and people just, going back and forth, making little points that don't really relate to the market. And I sense that there are quite a few people that spend a lot of time there, and these oftentimes I think are people that don't want to take responsibility for their own trading decisions, and they think maybe they'll pick up a hot tip or whatever they think. But to me, it's entirely a waste of time, and I just don't participate or read very much of them. So I think if you're going to spend your time productively, avoid the chat rooms.
Yeah, it's easy to say things that are negative and find something wrong with something. It's hard sometimes to find that little ray of sunshine in there.
It is, and when you're reading somebody, you really don't know who's writing that, whether it's someone who, is authoritative about what they're speaking, or someone who's just putting out some words there.
Or they're trying to manipulate you.
That's very possible, yes. So also, the people that I follow and that I believe in, I don't think that we should assume that anybody is somebody that we should try to take their program and fit it to us. I take portions of it, or I take the spirit of it, or the information, or the validation of something that I've been studying. And then I put that information together in my own way into my own investment model. And that's another thing. We have to have a model that fits us. And so for me, I concentrate on the junior miners and the streamers. I really like some of the streamers. And I have a few select exploration plays. I don't do a lot with the majors occasionally, and I'm also certain country risk areas or certain areas that I just am not interested in. I'm not particularly interested in some of the plays in Central Europe, for example, or maybe in Turkey. But that's just me. So I don't think you can be a jack of all trades. I think you have to kind of specialize a little bit, maybe in the area of the world that you are knowledgeable about, or the type of operations, or the style, or even the management that people. There's certain management individuals that I'm very intrigued with, and I really pay attention to what they're doing and saying. So I think you have to put together your own model that fits your interests and your desires.
Well, speak about geopolitics coming around and biting you on the butt. Barrick Gold, the biggest gold company in the world, saying they might have to write down $5.5 billion on their investment in the Pascua Lama mine, which is on the Chilean-Argentinian border.
I have not visited that property, but it's one of the most fascinating stories I've ever run into, and I always kind of keep up with the news that's going on, just like you're mentioning. I guess the final chapter has not been written yet on that story, but I really have to wonder if it will ever be brought into full production. I think at some point it might be partial production, but it's a huge project with huge issues, and it's going to be interesting to see how it plays out. But this is just one thing that shows the complexity and difficulty of bringing a large project on stream. And I think maybe the days of the mega projects are pretty much over. I don't think you're going to see very many more of them even being attempted. I think the junior space is where the big production increases are going to take place over time, with a number of small and intermediate sized producers that are filling the production pipeline, as opposed to new giant projects coming on and throwing off 20 or 30 million ounces of silver, or 500,000 to 2 million ounces of gold a year.
Yeah, I think the $5.5 billion is about half of what they expected to make over the lifetime of this mine.
That's really amazing. It's just someday somebody ought to write a book on it, and I'm sure they will. But it's one of those things that you really couldn't make a fiction work out of it. It has to be fact, and that's exactly what it is at this point.
I know we're always told, take a look at history and see if something fits the kind of scenario that you're in right now, and how that might affect your investment plans. You say we're kind of watching that 70s show all over again.
I think we are, and there's a real indication that this decline that we're seeing, for those of us that believe that the bull market is intact and is going to rise again, it's a lot like the late 1970s, when gold had lost about half of its value, and the price stayed down for over 2 years, and it was extremely difficult to get anybody to even stay in the market, let alone remain interested, and a few coarse contrarians did. And then prices proceeded to rise about 700% over the next couple of years, with a blow-off where a big chunk of that took place in the last 4 or 5 months. I really think we're going to see the same thing again. The timing may be a little bit different, but I think we're well into the latter stages of this decline, which has been a little depressing, to say the least, for any of us who've had accounts. Some of the biggest names in the business are down 50-60% on their accounts. But I believe that the potential for when this turns around, and it will then eventually reach new highs and go into a public mania phase, it really warrants someone being involved in it if they believe as I do.
David, interesting point of view, and maybe see a lot of people investing right now, they weren't even born then. They don't really realize what happens, but again, we can all read, can't we?
That's right. Going back and looking into the history is really important. It gives you a sense of grounding. There was a Roman, I might have been Cicero, but I'm not certain on that, made the comment, he said many, many years ago in the Roman Empire, he said, if you don't know history, you remain forever a child. And so I think reading about the past and thinking about it can give us important clues. It's not always a roadmap, but it gives us a clue as to how human nature plays out, which tends to repeat itself in that regard. And I think I'd like to close with a comment that Jeff Clark made a few days ago when he was doing an analysis about where we are and how far, down prices have gone. And he talks about when things turn around in a secular bull market, and he said, just buy a big decline and hang on for the ride. And I think that's about as good of advice as you can come up with. Choose your stocks, your position wisely, initiate the positions into weakness, and then just turn off your computer like they did in the Star Wars and just hang on for the ride. And I think it's going to be a very productive and profitable one over the next few years.
And thanks a lot for chatting with us, David. My guest has been David Smith, the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can contact us with your questions or comments at info@HowStreet.com. I'm Jim Goddard.